Hey harvesters, and welcome to the channel where we run simple and straightforward options trading to generate a daily income stream. My name is Matt, and in today's video I'm going to go over the trades I executed for July 22nd. I'm going to talk about the covered calls, the cash secured puts, why I chose specific strike prices, and my trading methodology. I like to keep things straight, simple, and nothing too fancy. Then we're going to take a step back. We're going to take a look at the last 69 trading days and see how this options trading has actually played out during that time period. And lastly, I'm going to talk about what I plan on doing for tomorrow, July 23rd. So let's get started. The first thing I like to talk about on my channel is my Robinhood account. And it's more so just to show you guys how much money I'm dealing with to generate my daily income stream. And with that being said, I am at $171,506.26. Let's head over to the Robinhood and let's talk about the individual trades I executed. All right, kicking off July 22nd, guys, I ran 3 covered calls and 2 cash secured puts. The covered calls, I chose the same strike price. I chose the 564 strike price. Today, the market opened at 564.19, but then shortly after it opened, it pretty much shot down. So I tried to make as much premium as I could, but because the market regressed a little bit, I wasn't really able to make that much premium on some of my covered calls. But end of the trading day, I made about $70 per covered call. And since I ran 3 of them, I made $210 off of those bad boys. And then the other thing I did is I ran 2 cash secured puts on the QQQ. I chose a strike price of the 562 and a 561. And I wasn't looking for these 2 strike prices to get assigned. However, at the end of the trading day, both of these were assigned because, the market closed at the 561.21. I had to make a quick update to the trading at close for the QQQ. And since all of my strike prices were below that cost basis, so that means I got assigned 200 shares of QQQ. So going into July 23rd, I now have 500 shares of the QQQ. And we will see what we do once I head over to Robinhood. We'll start discussing some of the situations. But because I'm using a little bit of margin to purchase some of those QQQ shares, ideally for these 2 CSP assigned shares, I am going to try to sell those at the money. So I'm pretty much going to choose a 561 strike price or a 562 strike price to at the money, rack in the premium, and then offload some of those shares. But if the market is stronger, I'm just going to do whatever the at the money is higher than my cost basis. But if it's lower than my cost basis, I will not choose a strike price lower than what I bought in at, if that makes sense. And this is the same thing with my covered call options, guys. I don't ever choose a strike price below my cost basis. That's why you will always see me choose something like $1 or $2 above my dollar cost average mark. But end of the trading day, guys, I made $345, which is still a solid day of trading, even with the market being kind of a little weaker than it was the previous couple of days. So let's head over to the other side of the spreadsheet and take a look at the last 69 trading days. All right, guys, let's dive into it. For the 69th day of trading, as we see annotated over here, we made that $345. And then if we look at the account value, we're at that $171,544. And it is nice to see that as time progresses, the account value is going up. So that means I'm either doing something right or this bull market is stronger than my bad trading. But end of the day, the percentage gain is about 17.24% based off of the amount of money I put into the account. And the realized appreciation gain plus premium is about $21,839. So we're doing quite well after the last 69 trading days. I'm really pleased to see how it's progressed thus far. And we still have about 23 weeks left in 2025. So there's plenty of opportunity to make some more money. And I'm really excited about that. Looking at my trade win percentage, I'm winning 98.55% of my trades running this strategy. I had 1 losing day, and that was more so just a case of inexperience. I didn't roll my option properly, but we can get into that. Whenever I have time, I'll make a specific video on that and then just options trading in general and how to do it. But I had 68 winning days, 1 losing day. Like I mentioned, we have been trading since April 11th, so that's been about 69 trading days since then. I'm averaging about $316 per day, and then I'm also averaging about $1,559 per week. So that's running pretty well. For the average monthly premium, this number hasn't changed in about a month because we're still waiting for the numbers for July to complete. Once those complete, this monthly average will also adjust accordingly. But as it stands right now, we're at that $5,651. So we are there. Looking in this yellow section, for anyone that is a new viewer, these are just estimates based off of my account's performance. So everything that's in blue is what I'm actually performing. This yellow stuff is just based off of an estimate. And if you take the average weekly premium and multiply it by 52 weeks in a year, I'm going to be making about $81,116 if everything stays exactly the same with the market conditions. I say this in every video, and then I still always see comments. What are you guys going to do when there's a bad market correction? I'm going to do what everybody else does, wait it out. I might have bad premium for a little bit, or I might risk trading options below my cost basis, but with the intent that if it's starting to go the opposite direction, I need to make sure I roll the option so that I can either make money or just send it out a couple of days later so that I don't realize a loss. So that's kind of the thought process. And of course, people want to give you warnings because they're usually talking based off experience. But I will say the one caveat with this strategy is because we're investing in good ETFs like the QQQ, the SPY, like it is very hard for me to really see the risk. The worst thing that you have to do is wait longer. Market goes down, all you have to do is wait longer, and then, yeah, just make a little bit better premium. It's okay, guys. It's going to be a correction market. Everyone's going to be kind of upset because the money is down. Moving forward, that's kind of the thought process when it comes to dealing with those kind of markets. Back to the average, though, looking at these numbers as a percentage, I would make about 55% a year. And from April to now, that ranges from about 49% to about 60%. So 55% is right in the middle and right on par. This initial goal was when I had a smaller account. I only had 86,000. Now we are way beyond that point and blowing it out of the water. Theoretically, for me to be happy and reach my goal for 2025, I only need $7,900. And I think I'll get that within the next month and a half to 1.5 months or 2 months. Yeah. But why are we doing this in the first place? So the reason why I undertook this options trading myself is I want to generate income. I don't want to be a buy and hold investor and have to wait 20, 30, 40 years for me to then pull out my money from a tax advantage retirement account. I don't want to do that. I wanted to find a different mechanism. And I initially started with the high income ETFs. And then once I invested in them for about a year and then had a little bit of a correction market come April with the tariff time, I decided that, man, these high income ETFs, they're just like a pig with lipstick on it. Yeah, you're making some money. Yeah, like the weekly premium looks really nice. But if you drill down into that weekly premium that you're making from those options, some of it is based off of NAV erosion. And if you look at the actual gain, it's not really that good. I don't like how the share price keeps going down. So I wanted to find a different mechanism to generate income. And then I used to do option trading a little bit, like covered calls and cash secured puts, but I didn't have an account big enough for me to actually make decent money. So I didn't think it as a viable option. And boy, do I regret that decision. If I just would have stayed more consistent with that options trading, and then instead of trying to find the home run, answer to solve it all, I would be in a better place than I am today. But hindsight's always 20/20, but we are here now, right? So with this different colored estimated income tax, end of the year values, I'm trying to estimate what I plan on making with the coming on years based off of what my account is performing. So the way I'm going to operate this specific section of the spreadsheet, if you guys stay with me for the next couple of years, is every year that concludes, I'm going to sell lock these, and then whatever the follow-on year is in the follow-on years, all these numbers are going to be based off of these percentages and these daily averages. So for 2025, theoretically, by the end of the year, I should make somewhere around $57,000. So as it stands now, that would be this 21,000 I've already made plus this estimated hopeful, because this estimated hopeful number is based off of my weekly premium. So theoretically, because I started options trading, 3 months into the year, so in 2025, I'll only have 9 months of options trading, but I should make $57,000. And I'm a high income earner, and Uncle Sam's going to want to rob me with taxes because they think they can spend money better than I can. And the end of the year value, so basically adding the estimated income subtracted by the taxes to my current account value, I should at the end of 2025 have $187,000. So that would be a great number. And then that's for year one. Ideally, if I can make, well into six figures for a couple of years, and I definitely want to continue trading throughout a bear market. So hopefully, I don't want to say hopefully is the wrong word. I don't ever want to see a bear market, but I definitely want to, before I would ever stop working from the strategy, I would like to see how I trade in a, correction market, so that I can kind of build the right foundational muscle memory of, hey, market's down, this is what I did, this is what I can do. I want to build that strategic resilience during that time. So I really wouldn't stop working until that point, until I tasted a little bit of a correction market, so that I can have the confidence moving forward, like 2030, 2035, 2040s, that I've done it before. I'm able to trade past it, because it's easy when there's a bull market, right? It's easy to make money when everything is green, everything's going up, and you're not really tested as a trader during that point. It's when the market is super red that you're like, man, my account's down 20%, and I don't know when it's going to end, right? When is the pain going to end? So therefore, I really would like to suffer through that type of pain before I would kind of like be accepting of that. Before I would be accepting of, not working and then taking this as my full-time job. However, that we will see how that plays out. But right now, my goal is by 2030 that I think $355,000 a year would be plenty of money for me to not have to work anymore. I would have to pay about $124,000 in taxes because I am that high income earner. And by the end of the year value, I would have $871,000. I will say this, if I were to stop working by 2030, I wouldn't have my main salary. So this tax rate might be a little bit lower, because the way the tax system works, it's actually gradual from $0 to $11,000. It's 10%. From, $11,000 to like 30 something, it's going to be 12%. So is that the tax system is actual gradual. It's not a flat rate. But I also am I'm 31 years old, I have a girlfriend, probably going to get married, probably going to have kids. So also it's easy to say, oh, I'm going to stop working, but then you also want the best life for your kids. So then would I grinding out for a little bit longer of working so that I could retire maybe by 2040, maybe 2035? I think by 2035, this should be more than enough money I'm making per year, and the account value of 4 million should be enough, right? If I need more than that, I'm just way too greedy. I need to reevaluate what brings me happiness in my life. So we will see. Yeah, so let's just talk about the 2035 numbers. By 2035, I should be about 41, 42 years old, and I should be making $1.6 million, and the account would be about 4 million. That would be more than enough for me to stop working. Same thing with the 2030 number. So 5 years from now, I'd be about 36, 37 years old, making that kind of money on top of my high income. That would be fantastic. Yeah, but just because I like even numbers, but nothing could stop me from, stopping at 2031, 2032. These numbers are all fantastic, right? Yeah, guys, that's just kind of the thought process. That's where I want to end up being. These numbers are based off of my account trading. So if I trade really well, these numbers are going to look really good. If I don't trade really well, these numbers are going to look bad, and you guys are going to be able to follow that. Let's talk about the weekly values. For the week we are currently in, we're at $856 of options premium made and appreciation realized. So yesterday was $511. Today was $345. We are doing quite well. We have 15 weeks that have fully elapsed. And for the month of July, we are already at $4,883. I think by the end of tomorrow, we should hit that $5,000 mark. And lastly, we have already talked about this yearly tracker. We're already at $21,839.15. All right, I will do one more call out. For the margin costs, I like to track this number because some people are deathly afraid of using margin. And for me to make about $6,593, I only had to incur about $1,012 of margin costs. So let me explain what happened here. During June, that time frame, I was running covered calls just using my cash. And then I had margin buying power available. And the way that Robinhood works is they only allowed me a certain amount of money from my buying power to run my options collateral or my event contracts. So I think I was only able to run 2 cash secured puts either on SPY or the QQQ. So ideally what this margin cost is I ran a cash secured put, and then eventually because the market regressed a little bit, they got assigned. And then because of that assignment and I was owning the shares, I had to realize margin interest. So that's what this number is. So basically, if I didn't use the margin buying power available in my account, I probably would have made half of the money for June. So imagine making what, $3,300. If I didn't use some of the margin, I would have left about $3,000 on the table. And for me, I would rather pay $112 of margin cost to make an additional $3,000 any month of the year. That is not even a question. And then for July, I'm being a little bit more aggressive. So I anticipate this margin cost being slightly higher. But if the margin cost is slightly higher, but then I still end up producing more income, I think that trade-off is definitely worth it. Of course, I don't want to be going, for less or better words, balls to the wall with margin. I just want to use just enough so I can squeeze out a little bit more income. I'm not going to be the guy that's maxing out all of my buying power. I mean, theoretically, I would be making a lot more money, and things would be a lot more interesting with this channel. But I'm trying to do these things steady as she goes. Cool. So that being said, guys, super happy with how this options trading has gone so far. I'm only doing the simple stuff, only doing the covered calls, only doing the cash secured puts, and moving forward in that regard. I will probably never touch the buy calls unless I'm starting to get bored of this simple options trading. But yeah, guys, let's head over to the Robinhood account and then let's talk about what I plan on doing for tomorrow. Okay, guys, we are back at the Robinhood screen. So let's take a look at what I'm dealing with. So mention the account value right now. Oh, wow, the overnight's going up. That's quite nice. So currently I own 500 shares of the QQQ. So that's really what I'm going to be dealing with. Could I be greedy and run another cash secured put? Let's take a look. So right now, this is what my buying power looks like. I don't have any cash. I'm using about $123,000 of margin because I bought those 200 shares of QQQ from a cash secured put. So that's why this margin cost is a little bit high. So I still have about $297,000 of buying power available. Tomorrow, I have for event contracts about $97,000. So theoretically, if I wanted to, I could run another cash secured put on the QQQ, or I could do it on the SPY. I might just do it on the SPY just to change it up. But I could theoretically run about 6 options contracts tomorrow, which I don't know. I might think about doing. We'll see how strong the market is. If it's green and strong in the pre-market, I might consider the cash secured put. But if it's red and trending down, I might just avoid the cash secured put because I really would not want to get another 100 shares of anything assigned. So I would like to keep my risk lower. So ideally, we will see what the market shows up, but I will talk about that situation. So let's go to QQQ. Let's go to the money printer option, this trade QQQ options. And going to beat the dead horse here, guys. Sorry. Buy call. Don't do this. This buying call is more for the advanced trader that's been doing it for quite some time. Theoretically, you can make more money running these buy call options. However, 90 to 95% of investors that run this option are going to lose money. So just do the safe bet, own good stocks, and then run options off of those stocks. For me, I'm biased towards premium, but if you own 100 shares of a good underlying, you can choose strike prices that are further out of the money. So you could squeeze out a little bit more money just holding something long-term instead of, what I'm doing where I'm trying to be a little bit more aggressive. I don't mind if my shares get assigned or taken away. I'm usually trying to do a little bit of appreciation, but primarily I'm looking for premium and income generation every single day. So that's kind of the goal here. But you can, if you're a buy, hold, long-term person, you can also squeeze out extra income by choosing strike prices that are further away. Making a little bit of extra money is better than no extra money. But because I have 500 shares of this QQQ, buy call, let's go, baby. Covered calls. Okay, so let's look at what the market is currently at. So we're at the 562.45. That is at the money mark right now. I bought 100 shares at this 561, 100 shares at the 562. And then I have like 300 other shares somewhere in the range of this 562. So theoretically, if I wanted to just do a capture all, I can choose a 563. So for this 561, 562 shares I bought, I'm probably going to run 2 contracts at this 563. right? So that would net me about $46 because I ideally for this 561, 562, I want to offload it. Maybe let me pause and think about this. All right, I'm changing my mind, guys. I will just sell at the money. So I bought 100 shares at the 561. I will choose a strike price at this 160. I did buy these 562 were assigned, so I'm going to choose these because ideally I would like them to be assigned away so I can free up that margin and then just have that money available to run cash secured puts. So for my strategy, I'm going to choose at the money for the cash secured puts that I bought today. And then for the remaining 300 shares of the QQQ, if the market is looking exactly as is, I'll probably choose one strike price at this 563 and then maybe two at this 564. See what these deltas look like. The 564 delta is about a 0.23, so there's a 23% chance of this executing. $48 is not that much money for about, $56,000 of money, but I also don't want my shares to get assigned pretty much for free. So we will see. I might run all three of my options at this 563, but I always like to offset it a little bit and spread out some of my options. So I might do one at the 563 and two at the 564, or vice versa, two at 563 and one at the 564. So we will see. But just running as is, just off of these four options, I would make about $397 of premium as is. I think that would be a fantastic number. And then if I really wanted to gamble and run another cash secured put, I could probably squeeze out another $50. So is that 450? Add in another option. Man, tomorrow might be a massive day. So we will see how it plays out. But yeah, let's see what the SPY would look like for a cash secured put. Just out of curiosity. So for anyone that's new to run a cash secured put, you do sell put. All right, let's see where we're at. We're at the 630. Man, that's kind of high. $200. Whew. It's a nice amount of cheddar. Realistically, let's see. Probably choose something at this, 628. I like this. I like using this 30 delta. So if anything, I might just use this 527. So $77. Man, tomorrow might be a massive day, or if the market goes tanking down, it might be a bad day. We will see. Yeah, guys, that wraps up what I have for you guys today. I plan on running 5 covered calls. Some of it spaced out, some of it at the money from my dollar cost average, maybe one cash secured put. We'll see how strong the market looks like tomorrow. Yeah, guys, that's the video. Hope you're doing well out there. Let's stay locked in, stay disciplined, stay harvesting, and I will see you at the next one.